Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 2nd of May 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. A relatively quiet session overnight on the world's global foreign exchanges, particularly given that we had a meeting of the US Federal Reserve, but they decided to keep rates on hold, and as you can see, there's been very little major movement in FX rates as a result. Nonetheless, there are a couple of key pointers to look at. First of all, continuing gains for both the Australian and New Zealand dollars against their US rival, up by 0.15 and 0.18% respectively. We also saw continued upside momentum in the euro against the US dollar, with the euro managing to add 0.12% on the day and taking its weekly gains to a respectable 0.7%. Whether that momentum can continue over the coming days remains to be seen. Certainly that's something I'll be keeping an eye on. Elsewhere, the dollar was on the front foot in Asia against the Chinese yuan, adding 0.14% against the US currency. There's some talk today that authorities are hopeful of a trade deal that could be concluded in the next couple of weeks, and that may well have improved the US dollar sentiment there. Dollar index, for its part, not sharing the love there with the dollar yuan rate, and in fact the trade weighted dollar drifted lower on the day, down by 0.09% over the course of the last 24 hours. The dollar was also in retreat against the South African rand, where it gave up 0.27% on the day, although the rand clearly still trading well above that 14 level at 14.4129. In terms of the world of crypto, modest gains for both Bitcoin and Ether, but they are heading higher on a weekly basis, up by 3.65 and 4.5% respectively. Okay then, what's on the calendar? Events that may move the markets today. Well, we've already had new home sales data out of Australia for the month of March, a slightly disappointing read compared to the prior signal. And then to come this morning at 6 a.m. GMT, we'll have retail sales data for Germany for the month of March. That'll be followed by similar data out of Switzerland at 6:30 GMT. And then at 07:55, our final look at German manufacturing PMI for the month of April. And at 8:30, market construction PMI data out of the UK for the month of April as well. We paused then until 11 a.m. GMT, probably for the pick of the day's central bank data from the Bank of England this time. It's the Bank of England interest rate decision, but it's a super Thursday, and so we also get details of any QE adjustments. The Bank of England's quarterly inflation report, always worth having a look at that, alongside the Bank of England minutes, so a chance to see who said and voted how in the MPC meeting. And of course, let's not forget that 30 minutes later we'll have a speech and press conference from Bank of England Governor Mark Carney. An hour later we jump over the Atlantic at 12:30 GMT for continuing and initial jobless claims data. Of course, these reports take on added significance ahead of tomorrow's non-farm payrolls release. We also get today non-farm productivity for Q4 2018 and a look at unit labour costs for the fourth quarter in 2018 as well. At 1400 we'd stay in the States for factory orders data for the month of March, and then to conclude the day's proceedings as far as the high impact calendar is concerned, at 17:30 we'll hear speeches from central banking heavyweights Jens Wiedmann and Peter Priet. Okay then, baking news and comment that's caught my eye overnight. And first of all, Taiwanese manufacturing PMI has fallen to 48.2 in April from a figure that was already in contraction, i.e. 49 in the month of March. That marked the 7th month of falling data, and perhaps more concerning still was the fact that new orders and output components both fell at their fastest rates recently on reduced demand. So some worrying signs there in the Taiwanese economy. I should say though that it wasn't all bad news out of Asia today, and that some other economies saw a pickup in manufacturing PMI, including South Korea. But South Korea also saw its inflation pick up from a 3-year low in the month of April, and it bounced to plus 0.6% from the prior reading March in plus 0.4%. However, that's a far cry from the type of rates that we saw throughout 2018 and the Bank of Korea's own target for this year of plus 2%. So still plenty of work to do in terms of trying to get the South Korean economy to recover on that metric. Meanwhile, the UK will head to the polls today in local elections, the first time that voters have had a say since the announcement of the Brexit deferrals. Now, of course, the vote could become a proxy for electoral dissatisfaction. People may choose to register protest votes or may stay away from the polls completely. It'll be very interesting to see what the exit polls suggest and how that could affect sterling exchange rates, of course. Okay, food for thought and time for something to take away with you into the trading day and beyond. And why not think about this? Now, as we saw earlier, Taiwanese PMIs, manufacturing PMIs were falling again. And Taiwan, of course, is heavily involved in the chip and mobile phone industry. So the question I'm wondering here is, are high prices and a lack of innovation in those kind of industries undermining tech growth? The evidence here that perhaps that is the case comes from a couple of charts. First of all, a look at the rate at which customers are replacing mobile phones. This is data from Bloomberg and was derived from the large US carrier Verizon. But as you can see, the rate of renewal or upgrade on mobile phones has been declining from peaks in Q4 2017, as the Christmas period, and again in 2018. But the general tone is down. We've also seen, as a result of that perhaps, that iPhone sales have been falling on a quarterly basis, and indeed revenues from the iPhone were down 17% in the latest set of Apple figures. There hasn't been much, has there, in the way of stunning new innovation in mobile phones, and when phones are priced at $1,000 or even $2,000 in the case of Samsung's latest folding model, you can understand why consumers might be reticent to upgrade and how that could have a knock-on effect to economies like Taiwan. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're unsure about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly, please. Thank you for your time today.